Good afternoon, everyone, and good day. Welcome. This is Jason with Top Shelf Traders. Thank you for joining us. Gosh, we're already staring August in the face. I can't even really believe it. We're past Wimbledon. We're all the way through, cranking our way through July. I suppose I should have a positive outlook. Anyway, thank you for joining. We've got folks filtering into the room. Welcome. Give me a quick yes and yes. Yes, that you can hear me okay, and yes, that you can see the screen okay. Jason Love from the Oil Trading Group has a screen up. Just a quick yes and yes in the questions box, if you could. Perfect. I want to make sure that everyone can see this. And okay, awesome. We're going to go ahead and dive right in. This is a 45-minute session as we've indicated, and we want to be respectful of everyone's time. We're thrilled to have one of our longstanding partners with us, Jason Love. He's the founder of the Oil Trading Group. And Jason is an experienced trader. If you've heard of him before, that's not by accident. He's been running his own show and his own trading room for quite some time. And before that, he was a veteran of the United States Navy. He served during Operation Desert Storm. So this is a guy that knows trading, he knows execution, he knows stress, and he knows how to find an advantage. That's what we're going to be talking about today. Your trading edge, a statistical advantage over the market. And we're going to cover a handful of things that we talk about a lot. What's the number one job of a trader? The casinos, the house, they have an edge. So can you. What's the psychology of a trading edge? And what tools can you use to maximize that advantage? As always, we keep these sessions very informal. So you got a question, toss it in the questions box. If we can't get to it right away, we'll circle back to you. And of course, this session is being recorded. So without further ado, Jason, it's awesome to have you back with us. Happy July, man. And I'll turn it over to you.
Yeah, it's almost, thank you, Jason. It's almost football season, one of my favorite times of the year.
That's a positive spin on this. Thank you.
Yeah, we are 2 weeks away, actually 1 week away from training camp starting in most places. And so, as a Cowboys fan, I am a huge follower of the game, and it's a good time of year. Although where I'm at here in Texas, it's going to be 106 degrees every single day this week. So it is tough weather here to be outside, but we're all inside now, and we're going to spend just about 45 minutes. I've got a ton of information to cover here with you today. Jason is going to field the questions. I've asked him to hold off on most of these questions till after the session because there is a lot of information that I'm going to be sharing with you here today, and we do have a fairly limited amount of time. And again, to be respectful of your time, we want to make sure that we are being expeditious here in the process. Again, the session is going to be recorded. You're going to be drinking out of a fire hose, as they say today. And so you may want to go back and watch this and as you go through and go, oh yeah, I remember when he said that, and those kinds of things. And so at the end, I'm going to offer you a free trial into our day trading chat room. We'll talk about that more at the end. And then one final housekeeping note. I was just telling Jason that I'm just a couple of weeks off a oral surgery. And so I've got a few issues. And so my words sound a little funny, or they sound a little mushy at the end. Just understand that I'm dealing with a little bit of that. We're playing hurt here today, but the show must go on. And so again, my name is Jason Love, and I am the founder and lead trader here at the Oil Trading Group. That is me on the left in 1988 when I graduated from boot camp out of the U.S. Navy. That to the picture to the right is me a couple of months ago. And yes, age affects us all, doesn't it? Again, like I said, my name is Jason Love. I'm a veteran of the U.S. Navy. I was the vice president after I got out of the Navy. Became vice president of a 300-seat inbound call center. In fact, I didn't start out as the VP. I got out of the Navy. I went to school and started out as a on the telephones. This is Jason. How can I help you on an inbound travel call center? And I don't know, 15 years later, I had kind of worked my way up through the ranks and became the VP of that call center. I founded the Oil Trading Group back in 2010. When we saw that there was a need in this day trading educator space. We'll talk some more about that here in a few minutes. I do a twice weekly segment on Top Step Traders Squawk Radio in their chat room. We do that with their group of professional traders. 2 times a week. And I am a single dad to an awesome son. That's a picture of him in the bottom right-hand corner. Really proud of him. He's an awesome kid. He's a great baseball player. I told you it's 106 degrees. We've been playing baseball for the last 6 weeks, traveling around, looking and at colleges and college scouts and playing baseball. And we're going to graduate. He's going to graduate at the end of this next year. He'll be an incoming senior. And so good times right now. And so again, like I said, lots going on here with us. Again, when we all started here, we all kind of started in the same place. We all graduated from high school. I did so in 1987. And our journeys and paths are really all the same, right? It doesn't matter how you got here, but we're all sitting here together today, right? There is this kind of similar path of just twists and turns and, lefts and rights and ups and downs and all that kind of stuff that all brought us here today. Again, like I mentioned to you, the journey has no shortcuts. We all get here to where we are today. For me, going through the Navy, that was me graduating again in the top left-hand corner from high school in 1987. I went through boot camp, graduated from boot camp, and then was stationed on this ship, the Paul F. Foster, USS Paul F. Foster. It is a Spruance-class destroyer, and I was in the Navy from graduation until 1991. I actually was on the ship that shot the first shot in Desert Storm 1, Operation Desert Storm, which was the first incursion into the Gulf back in the early 1990s. What I'm going to show you today is going to be hard. But lots of things are hard, right? If you want to graduate boot camp, you got to go through Marine Corps boot camp. You got to go through what they call a crucible. If you want to go and become a Navy SEAL, you've got to go through what they call Hell Week. Again, what I'm going to show you today is hard. It's not physically hard, but it will be mentally hard for you. And so one of the things that we like to talk about in our trade room is that you have to pick your hard. Losing weight, stop smoking, quit drinking. All of these things are hard to do, right? It's hard to lose weight, especially as we get older. Right? It's easy to gain weight. It's hard to lose weight as we all get older here. Stop smoking. If you smoked for any length of time, you understand that quitting smoking is a hard thing to do. And also, like drinking, it is hard to do. Stopping is hard to do as well. However, the health ramifications of being overweight, getting cancer because you smoke too much, or having liver problems or personal problems because you can't quit drinking when you need to, these things are all hard to do as well. So if you are faced with a series of choices and both of them are going to be hard, right? Why not pick the hard that is right for you? I want you to remember that here as we move through this presentation. Pick the hard that is right for you. All right, so again, I told you that I was in the Navy. You're going to see a military theme in here today. And I did that on purpose, right? Because I want you to understand, make no mistake that trading is war, and you need to approach it that way. In fact, Sun Tzu in his book, The Art of War, said the victorious warriors win first and then go to war, while defeated warriors go to war first and then seek to win. And simply put, what this means is, and you know what I'm talking about, it's really the barrier to entry to get into trading is super simple. You buy a laptop, you put $5,000 in an account, you buy a book, a video, a training program, and now you're a trader and off you go. It's not till you blow out that first account, second account, and in some cases 3 or 4 accounts that you realize that you have to stop and be prepared before you go into battle. And that's simply what this quote means. Victorious warriors win first, right? They're in the simulator. They understand what their advantage is. They understand their edge. They understand how they're getting into these positions and what they're doing once they're in the trade, and then they go live. While defeated traders or warriors buy a laptop, fund an account, get a book or two, and then go in and blow out accounts before they take a step back and go, I have to do something different in order to be successful. So we're going to talk today and spend some time talking about your trading edge. A trading edge is a technique, observation, or approach that creates a cash advantage over other market players. It does not have to be elaborate to fulfill its purpose. Anything that adds a few extra points to the bottom line or the winning side of an equation builds an edge that lasts a lifetime. Casinos, as you know, make large profits because all of their games have a built-in mathematical edge on their side. Over the long term, they will make more money than they lose because of their statistical edge, right? So the casino doesn't care that Mary, 89 years old from Poughkeepsie, New York, is sitting over there in the corner and hits a $10,000 slot machine. They don't care because they know somebody else somewhere else in the casino is losing twice that, right? They know that if they grind it out over the course of the long term, that they are going to grind you out, and they have an edge that will ultimately pay them in the end, right? And we're going to talk about how you can have a similar type edge in your trading. Before we get started, Uncle Sam needs us to tell you that the Commodity Futures Trading Commission wants you to know that trading has large potential rewards, but also has large potential risk. You should seek appropriate advice from your broker or licensed investment advisor before taking any action. Past performance does not guarantee future results. The Oil Trading Group does not hold itself out as a commodity trading advisor, and given this representation, all information and material included herein is for educational purposes only and should not be considered specific investment advice. If you want to learn more about the government required disclaimers, you can visit our website and you can click on the tab that says government required disclaimers. All right, so let's talk about the psychology of a statistical edge. We just talked about football season coming up. And if you are a football fan, this will make particularly sense to you, but you may have some other sport. We just finished the World Cup. You may have been a fan of some World Cup team, or you may be a fan of some other sporting event. But if you're not, you'll still get the reference here. So here are two teams. You have the University of Michigan in yellow and blue, and the Michigan State Spartans are in the white and green. Now, if you look down at the scoreboard at the very bottom right-hand corner, you'll see that Michigan State was down 21-23. So they were down going into the fourth quarter. Sorry, there was 1 second left in the fourth quarter, and Michigan was winning 23-21. Now, you look at that little number 7 to the left. Michigan State was ranked number 7 in the country at this point, and Michigan was ranked 12th. So this was an upset. So let's say that you are a Michigan State football fan, right? You graduated from there, and that is your alma mater, and you live and die Spartan football. You know this game is your in-state rival, and it's one of the biggest games of the year that you like to be you want to participate in. It's one of the biggest games of the year, and it is a lot of fun. However, what you also know is that it makes you really nervous and uncomfortable when you're watching the game, right? Because you live and die with the snap of every football. But as luck turns out, you have a series of honeydews to do on this Saturday afternoon. And so, and guys, you all know what the honeydews are, right? Honeydew this, honeydew that. And so you said, you know what? I'm going to record the game. I'll come back and watch it. And while you're out doing your honeydews, you inadvertently hear the score of the game. While disappointed, you'll learn that your favorite team, the Michigan State Spartans, end up winning the football game. And so that makes you happy. When you come home, you say, you know what? I'm going to sit down and watch the game. I don't know how they do it, but they end up winning the game. So I'm going to watch it because I like to watch my team play. And you begin to watch, and your team is down 7 points at the end of the first quarter. At the end of halftime, your team is down again. You go into the third quarter, your team continues to be down, and you get all the way into the fourth quarter, and you look down right here at the scoreboard with 1 second left in the game. The Michigan State Spartans, you can see, all have their hands raised in the air, right? They scored a touchdown. They blocked a punt with 1 second left in the game, fell on the ball in the end zone, and ended up winning the football game. So for 59 minutes and 59 seconds, you didn't know if you were going to win or not, right? And otherwise, had you not known the score of the football game in advance, it would make you very nervous. In fact, you may have even turned the TV off because you said to yourself, they're never going to come back. There's 1 second left and they're down by 2 points. They don't even have the ball, right? And that's what a trading psychology, or that's what the psychology of a statistical edge does for you, right? When you have a statistical edge, you know the outcome before it happens, right? And so when you were watching this game and there's 1 second left in the game and you're down by 2 points, you know you're going to win. You don't know how you're going to win, but you know you're going to win because you know the score of the game before you sit down to watch it. So again, when you have a statistical edge, you know the outcome before it happens. Remember, victorious warriors win first and then go to war, while defeated warriors go to war first and then seek to win. You have an edge. Your edge in this particular game that you're watching here, your edge was that you knew the score prior to the final outcome, right? You knew what the score was going to be. So you weren't stressed out. You weren't nervous. You weren't hand wringing. You weren't, tweaking and changing and doing different things, right? You weren't changing, putting on the green Spartan shirt instead of the white one. You weren't doing all that stuff because you knew what the score of the game was going to be before you finished watching the game. All right, so we're going to come back to that in just a second. Before we do, I want to ask you a question. What is the number one job of a professional trader? I ask this question a lot, and when I get new traders, most traders tell me the number one job of a professional trader is to make money. Actually, the number one job of a professional trader is to preserve capital. It's not to make money, it's to preserve capital. Your number one job is to make sure you keep what you got, right? The number two job of a professional trader is to make money. So one more test here, a trading test. Can you tell me which trade will win and which trade will lose? The one on the left is either a winner or a loser, and the one on the right is either a winning trade or a losing trade. And can you tell me which one is which? Obviously, the answer is we don't know, right? Because both of these trades are identical when you get into them. They are both big purple dots. We don't know which one's going to win and which one's going to lose as we sit down and take either one of these trades. And here's the deal. It's the same thing when trading. Regardless of what your back testing, forward testing, your statistical probabilities are, if you have a trading setup that works 80% of the time, that means 20% of the time, it's not going to work, right? Is this one of those 20% of the time? We don't know until either one of two things happen, right? So as day traders, we don't know the difference between a winning trade and a losing trade before price either A, hits our target, or B, hits our stop loss, right? So remember that as we start talking about your statistical edge, right? We don't know which trade it's going to be until after the trade is over. All right, so one more trading test before we move on. Which trading system is better? The one that wins 90% of the time or the one that wins 10% of the time? Well, the answer truly here is incomplete, right? We don't know which one is better with that because we don't have all of the information. So in other words, I may have a trading system that wins 9 times out of 10, and every time that I win 1 tick, and on that 10th trade I lose 11 ticks. That's a losing trading system despite the fact that it has a 90% win rate. Conversely, if I have a trading system that has a 10% win rate, 9 times out of 10 I lose 1 tick, but on trade number 10 I win 11 ticks. With a 10% win rate, I have a winning system on my hands, despite the fact that the win rate was 10%. So this is what you get right here, right? From most trading educators. They want to tell you what their win percentages are. They want to tell you that their win percentage is super high. This trading system has a 65, a 75, an 85% win rate. Well, they tell you that because they know about you what I know about you. You equate winning to success. You equate a high win rate to being a successful trader. And while it is important to win, obviously, it's not the key component in what you are doing as a trader. Your win rate doesn't really matter if the numbers don't correspond. So remember when I told you what I would show you today would be hard, right? Let me show you what I mean. This graphic to the left is a 4-month window, and I've been doing this presentation for a little while, so this is August through November of last year. Every one of these green squares represents a winning day, and every one of those red squares represent a losing day. So August, pretty good month. September, not so good. October, decent month. And November, as we were going to the holidays, we had some time off, etc. But there's a few more red days than there are green days. So you might look at that and you go, well, maybe he's around break even, right, for that time window. Here are the statistics for that particular period of time. The total gain lost during that time was 1,083 ticks. The average winning trade was $384. The average losing trade was $185. The largest gain was $18.20. The largest loss was $340. I'm holding on to my winning trades about 5 times longer than I was holding on to the losing trades. and the winning trades were about 2.2%, 2.2 times higher than the losing trades. Now, if you look here at the number of winning trades, it's 33%. Number of losing trades is 52%, and the number of scratch trades or break even is 15%. So you may look at that and go, winning rate was 33%, yet there was still 1,083 ticks to be had. You're probably saying, I'm not sure about that. And that's okay. I'm going to show you mathematically why that's the case. So one of the things that we're going to talk about here right now is I call this lovingly our desktop psychologist, right? This is where when I'm in a period of drawdown, or the market's not going exactly the way I would like it to go, or things just aren't working out the way that I would like them to work, I come back and I visit this desktop psychologist, and I'm going to show you why and how you can make a 33 to 35% win rate work better than a 62% win rate. But first, I got to tell you a little story. So I run a trade room. I've done the trade room here for 8 years. I was going to say going on 9 years. It's actually right at 8 years right now. And so during this past 8 years, I've talked to literally hundreds and hundreds of traders as we've gone through this. And one of the things that I do is I trade 1 lot in our trading room now, but I used to trade 2 lots. And when I was trading 2 lots, and I'm going to tell you why I only trade 1 lot now here in just a moment. When I was trading 2 lots, though, I would get this question all of the time. Jason, why are you letting this trade go X number of ticks positive, and then it comes back and takes you out of break even? Remember, I just showed you that about 16% of my trades were break even, right? And so I'm not moving my stop to break even until after the trade goes at least 10 ticks. I'm talking about crude oil here at the moment. And so I would always get this question, well, why don't you take one off at 10 ticks and let the other one run? Why don't you do that? And that is another, I don't want to call it a fallacy, it's a way to do it, but it's another way that the vendors out there in the trade world, right, the educators, people like me, get you convinced that the system is good because they will take one off at 10 ticks so they can elevate their win rate. But I'm going to show you right now through this example why that's not necessarily the best thing for you to do. All right, so here's the way this conversation goes. Jason, why don't you take one off at 10 ticks and let the other one run? I say, that's cool. Let's talk about that. So I ask the person, where are your stops? Let's just start there. Where do you have your stops? And for the CL, most people tell me somewhere between 12 to 15 to 20 ticks on their stops, right? They tell me 12 to 15 to 20. And a lot of times it's a little bit higher than that, right? So for the sake of this discussion, we're going to talk about 2 CL lots, and we're going to go at the low end of what people tell me, and that's 12 ticks, okay? So 12 ticks at $10 per tick per contract is $240. Okay, so every time they take a trade, they risk $240. Now, conversely, we know that the first contract goes off at 10 ticks. So when they win, the first contract goes off at $100. Okay, hopefully you're still with me. Now, I ask, where on average does that second contract go off? Where do you take that second contract off at? And so after a little bit of and well, and I'm right, after a little bit of that, what I find out from people is that everybody does it a little bit different. Some people they'll bring their trail stop to break even +1. And so the contract goes, they take the first one off at 10 ticks, it comes back and takes them off at break even +1. Some traders will move their stop from 12 ticks down to 9 ticks. So break even -9. So truly, if it comes all the way back, it is a true break even trade, right? So one off at 10, the other one off at break even -9 is a break even trade. Sometimes that contract goes 20 ticks to 30 ticks. But when after hundreds of these discussions with traders, what I have found out over time is that the second contract on average, if you mash everybody together, goes off at 6 ticks. Okay? So when they are winning $160, 10 ticks or $100 on the first lot, and 6 ticks on average, or $60 on the second lot. Okay, so let's do the math. Every time you win $160. And every time you lose $240. Okay. So for every trade that you take and every trade that you win, you are getting a 66.6, you're getting 67 cents return on every dollar that you put at risk. Okay. You're getting 67 cents return for every dollar you put at risk. All right. Let's talk about the spreadsheet, the algorithm, the risk analyzer. Okay. So what I'm going to do here is I'm going to take some statistics and I'm going to show you mathematically how some of these things work. Okay. So, but first we got to set up the spreadsheet so that it can input the information so that we can get some results out of it. So we're going to start with an initial equity in your account of $15,000. Okay. So $15,000 is your starting equity. This is going to run 100 trials. Okay. So it's going to run 100 trades. Now, if you are a micro scalper, 100 trades might represent 2 weeks worth of trading for you. If you are trading 5 times a day, this will represent 1 month worth of trading for you. And if you are some other type of trader, it could be a longer period of time. But this is essentially going through and calculating 100 trades. Okay. Now, you have a $15,000 account, right? You have a $15,000 account. So if you come back through here and you say that every trade you take, you're going to risk $240 and you have a $15,000 trading account, that means that you are risking 0.016 or 1.6% of your account on every trade. So that's what you're going to put in right here is 1.6%. Now I'm going to draw your attention to this number. Industry standard best practices say you should not be risking more than 2% on any particular trading day, right? Some people say trades, I say trading day, right? So you have one trade. If you lose this one trade and you take another one, then you're going to have, and you lose that one, then you're losing 3.2%. Actually, it's a little more than that of your trading account on 2 losing trades. Now, that's not great, but that's what it is, okay? So we're also going to say that your average commission is $7. That's, whoops. Sorry about that. We did that in the wrong category. 0.016, 1.6%, and you're risking $7. Sorry, you have a commission of $7. That's commission and slippage. So not every trade is going to slip, and most commissions aren't $7 round trip. But when you put these all together, that should give you a close approximation to accounting for slippage and commission while you run your numbers. All right. So now for the fun stuff. So basically what we said was that for every trade you win, you are going to win 66 cents, right? So over here in this box is where you're going to put the actual numbers for that we're going to run through the scenario. So 0.66 cents for every trade that you win. And let's say you're going to win 62% of the time. And when you lose, you're going to lose a 1-to-1 ratio. So we set a risk of $240. When you lose, you're going to lose $240. Now, the number of trades that you're going to break even, and we'll do that number. Let's say you're going to break even on 4% of your trades and you're going to lose 34% of your trades. So that's actually not a bad system, right? That's not a bad system from a numbers perspective. You're winning or breaking even on 66% of your trades. I think most of you would say, okay, that's a pretty good number. I'll live with that. All right, so what this is going to do is this is going to randomly simulate all of these trades 100 times to give you what you could expect on this random simulation for your performance to be given these parameters. Now, this is not any particular trading system, right? This isn't, a moving average crossover or anything like that. This is not representative of a particular trading system, but more about your money management. All right, so we're going to go up here. We're going to hit start. Oops, we're going to hit reset, start. And what I want you to notice is we have a 1.6% risk. We have a $7 commission, and we have a $240 risk here, right? So these are all the parameters that we plugged in. And what we're going to be watching for down here is max drawdown, and then there's going to be a pop-up window that comes up here. We're going to click run all trials. And so with your win rate at 62%, okay, 62% win rate, you had a $3,300 profit in this particular month. and your actual win rate was 68%, right? So your actual win rate was 68%. Your max drawdown for this month is 5.2%. So not terrible on 2 lots, right? Not bad. You had to win 68% of the time, but that's not too bad, right? So we're going to run it again. We're going to click OK. We're going to hit reset. We're going to hit start and run all trials. This time, your win rate dropped from 68% to 60%, right? And you had a drawdown of $212. And the max drawdown during this run was 15%. Bleh, not great, right? So you had a 60% win rate, but yet you still lost $200, right? That's not great. And your max drawdown on your $15,000 account during this month was 15%, or let's see, let's just do it like this, right? You had a $15,000 account. Whoops, club back here, $15,000 account, and you had a drawdown of 15%. That is a drawdown of $2,250. Now, you're probably looking at that. If you were trading that at that moment, you would probably not like the way that that felt. So what this thing is doing is it's starting out with your initial equity, by the way, and it's just running through every single trade, right, to get you to the point where it spits out that final number. All right, we're going to run this one more time, and then we're going to change the parameters. So we're going to hit start. We're going to hit run all trials. And this time you had a profit of $3,000 again, with a win rate of 68% one more time. And the max drawdown this time around was 6.1%. Not bad, right? Not bad at all. So over the course of 3 months, you made $6,000, or roughly $2,000 a month, right? That's kind of how that works over the course of 3 months. Now, you had to win you had a win rate of about 65% during that run. All right, so we're going to hit reset, and we're going to come back, and I'm going to show you a 1 lot of risk. Okay, so remember I told you that we trade in the trade room right now. We trade 1 lot with an average stop of $100. That's 10 ticks on the CL, or that is 2 points on the ES. That's roughly our stopping points. We go a little above that sometimes and a little below, but it's average. What we're doing is a $100 stop. So if you take your $15,000 account and you take your $100 stop and you divide that by your $15,000 account, that gives you a risk of 0.0066 per trade. Okay, so we're going to go over here. We're going to go 0.0066, or 0.66% risk per trade. So remember what I told you earlier, you could only lose 1 trade before you exceeded, when you were trading 2 lots, before you exceeded the 2% threshold. Here, you can lose 3 trades before you exceed your 2% balance threshold. We're going to keep the same $7 commission and slippage idea, and we're going to come back over here. And this time, for every dollar you put at risk, we're going to win $2.50, okay? Which is about what I showed you on our statistics from that other sheet. And again, if you want to see these statistics and take a stronger look at them, or a longer look at them, you can visit the website. You can visit our website, oiltradinggroup.com. And if you come down here, I go through and kind of explain some of this stuff. But if you come down here, when I start talking about the statistical advantage, you can see these statistics if you want to study them. These are actually run a little bit longer in that window, but this will give you a snapshot, and that's on our website, oiltradinggroup.com. All right, so 2.5 to 1 risk reward. This time I'm only going to win 35% of my trades. I'm going to lose or break even. We're going to break even on 15%, and I'm going to lose 50% of my trades. Okay, so I'm going to lose or break even on 65% of my trades. You guys with me so far? Lose or break even on 65% of my trades. We're going to hit reset. We're going to hit start. And oops, let's see here. Stop, reset. Okay, and start. All right. So you see up here, 0.66% risk. You've got a win rate of 35%. Your risk reward is 2.5 to 1. All right, so we're going to hit run all trials. And with a win rate of 42%, okay, we had a profit of $58.71 and a max drawdown of 3.6%. This is on 1 lot of risk, right? So this is on 1 lot. The other trades we were taking was based on 2 lots of risk at 12 ticks. This is on 1 lot of risk at 10 ticks. And that win rate's 42%. So that's a little higher. And you may say, okay, Jason, why was it 68 when you plugged in 62? And why is this 42 when you plugged in 35? Well, this is a true statistical random distribution, right? So if you have an average win rate of 60% over 3 months, 6 months rather, some months are going to be a little higher and some months are going to be a little bit lower. And this is actually randomly distributing at those kind of rates. So we're going to try and run it one more time. We're going to hit reset, we're going to hit start, and we're going to hit run all trials. And this time my win rate was 31%, and my profit here was $2,000. This is 1 lot. The max drawdown was 5.5%. Now, here's one other thing that I want to show you here, okay? So just remember, this is 1 lot. You won 31% of the time, yet you still won $2,000, okay? Let's take a look at this right here. Okay, let's take a look at this run right here. This is trade 1 through trade 26. So that's 27 trades. During that 27 trades, 1, 2, 3, 4, 5, 6 wins. 6 divided by 27 is a 22% win rate during that window of time. Now, remember, I just told you I take an average of about 4 or 5 trades a day. Some days it's a little more, some days it's a little less, but that's where it averages out over the long term. If you came into my trade room right there and you saw me win 22% of my trades over the course of a week, you would head for the hills. You would tell me this guy's crazy. This guy can't trade. He doesn't know what he's doing. But if I told you on a 1 lot, you're going to win $2,000 this month on low risk, you'd probably tell me, okay, I'll take it. But this is the same statistics. Now, here's what happens. If you came into my trade room right here, okay, during this run, trade 52 to 60, that's 69 trades, and I lose 3. That means I won 67% of the time. And during that run, I won about 6 times about $1,800, almost $1,800, and lost about $400. So during that trading window, you won $1,400 on 1 lot. You probably think I'm the greatest trader that's ever lived, right? Not literally, but you know what I'm saying. You probably think I'm pretty cool. And then this is when you join the trade room. And then look what happens right here, right? You go through this drawdown period, and that's where everybody says, oh man, I got stuck. I got hosed. This guy got me. I bought another system that doesn't work. When in reality, it's the same system. It's the same system that gave you $5,800 on 1 lot the month before. And now with a 31% win rate gave you $2,000, right? It's the same exact system. It's the same exact results. Let's hit reset. We'll hit start, and we're going to hit run all trials. And we're going to give you the final measurement, 4170 on a 39% win rate and a max drawdown of 5.6%. Now, over the course of 3 months, with these particular parameters plugged in, 5871 plus 2001 plus 4170 is 12,042. Divide that by 3. You're averaging roughly $4,000 per month on a 1 lot with a win rate of about 35%. Now, the max drawdown on the other scenario I showed you was 15.6%. Your max drawdown this time around was 5.6%. That's a 1 lot taking a 2.5 to 1 risk reward versus a 2 lot 62% win rate taking 1 off at 10 ticks. Now, I did a study that I'm going to plug into and my time's running out here, guys. I told you it's going to be like drinking through a fire hose here. I'm going to plug in a link to
It's all good, Jason. Do your thing, man.
Cool. So I'm plugging in a link here to a spreadsheet for you. Okay, and I plugged in this link, and so you can take a look at this. But this is a study that I did using those exact same parameters, showing you what it would look like with 2 lots and a $200 risk. So on the CL, that's 10 ticks. It's a 62% win rate. And instead of saying that because we lowered the risk rather, I'm giving you 80 cents reward for every dollar you put at risk. Okay. And so if you take a look here, your beginning equity was $15,000. Your ending equity is $19,628. That's 6 months. That's about $4,600. Not bad, right? Not too bad. Using the same parameters we talked about before. And then what I've done is I've gone through and I've shown you what every single trade for 6 months would look like. And then I threw over here an equity curve so you can kind of see. So the blue, what looks like a heart monitor here, this is your equity curve, and this is the 10-day period moving average around that, right? So at the end of month 1, your equity had a nice little slow but steady climb from 15,000 all the way until you got to the bottom down here at 17,275. And then you start month 2 with 17,275, and it hits the fan this month, right? The market begins to go against you. And so if you take a look at your equity curve here, you started at 17,500 and you dipped almost all the way down. You almost gave back all your profits from the previous month before you began to rebound back. And so we did this for 6 months worth of data, right? So you'd be able to understand this is 2 lots, taking one off at 10 ticks, letting the other one run with a 62% win rate. Your final bottom line was about $4,600. Now, $4,600 divided by 6 months on 2 lots is $766 per month. Raise your hand if you signed up for that, right? Most traders that I talk to don't say that they don't want to, they didn't say, hey, I didn't sign up to make $766 a month on 2 lots. $766 a month divided by 20 trading days is about $38 per day, okay? So most traders don't sign up for that. Now, I will say this, if you have a $15,000 trading account and you made $766 a month for 12 months, that's $9,192. That is an equity growth of about 62%. You should take that and be happy, right? Because that beats just about everybody else out there, right? But that's not what traders think. That's not how they think, right? That's not how they think. Now, I did this same study with a 1 lot, okay? 31% was the win rate that we used. We said we're going to earn $2.50 for every $2.50 for every dollar we put at risk, and you had a 31% win rate. Your equity climbed from 15,000 to 30,000. That's $15,000 over 6 months. $15,000 over 6 months on a 1 lot is about $2,500 per month, which is what you had expected, a 2.5 to 1 risk reward ratio. Your average win rate was a little over 31% doing it this way. And I did the same thing here, right? We went through the same equity curve and the same model. Now I want you to look at month number 3 here. Month number 3, you had a win rate of about 36%, and your account grew from 19.1 to 23.6, which is about $4,500. And so we're going to come down here to month 3, and I'm going to let you look, right? And this is the same story I was telling you before. If you come into my trade room right here and you say, gosh, this guy's the best thing in the world. There's trade 24 through 33. That's 10 trades. He won 90% of his trades. This guy is awesome. Sign me up. Where do I go? How do I get on the dotted line here, right? Where do I sign up? And then you go through this run right here, okay? Where trade 255 to trade 276 is 22 trades. And in that 22 trades, I win two times over 22 trades. Okay, so in a trading week, you see me come in and fart and fall down 91% of the time. Now, you would head for the hills. And if you bought my system during this run up here, you say, man, this guy, I want my money back. This is not good. You start going to forums and you start telling everybody what a joke I am. Okay. If you bought it here and then you go through this run here, right? At a minimum, you will start doing the thing that we all do as traders. We will tweak it. We will add the moving average, the CCI, the RSI, the MACD divergence, convergence. I got to add the Heikin-Ashi cloud. I got to add Renko bars. I got to do something to fix this broken system. Both of these runs were in 100 trades over the course of a month, right? They're both in the same system. They're both in a system where you won $4,100 this month. Why are you tweaking it? You're tweaking it because you forget what the statistical edge provides you, like knowing the score of the football game before you watch it, where you're not stressed out. The casino's not stressed out because they know the statistical advantage is in their favor. You know that you run through these kinds of things are going to happen, right? These kinds of ideas, this kind of thing is going to happen to any trading system. Randomly distributed numbers. Remember I told you, I showed you the two purple dots, right? Which one's the winner, which one's the loser? We have no idea before we get into the trade which one's which. But what we do know is if we manage our money properly and if we hold on for 2.5 to 1 risk reward, we know that we're going to find that equilibrium, right? We know we're going to find at the end that this system is going to work for you. All right, so I'm going to we went through those statistical, we went through those different analysis. So basically your equity growth is a function of your win rate, your position sizing, and your reward to risk ratios. So again, if the number one job of a professional trader is to preserve capital, then the number one job of your trade setup is to find an entry location that will give you the best location to minimize your risk and maximize your reward. Your number one job of a trade setup is not to make you money. The number one job is to control your risk. The money will come if you control your risk. I just showed you from a statistical standpoint that you can win 31% of the time, exactly half of the guy that's winning 62% of the time, and do much better than he's doing because you're managing your reward and your risk properly. All right, so for us, we have basically two types of trading tactics. First of all, we look for decision points, support resistance areas, and then we have two types of entries, either confirmation signal or a time-based bar first time touch. And I'm going to go through this pretty quickly, and I'm going to invite you in for a more detailed explanation into our trade room this week if you're so inclined. We do have a set of what we call market maker levels. These are decision points. This was given to me by a floor trader. These levels were given to me and taught to me by a floor trader who traded in the pits for 30 years. I was fortunate enough when I got into the call center job to have a mentor that got me from entry level, this is Jason, how can I help you, to the vice president of operations. I was fortunate as a trader to have a professional floor trader show me the ropes, right? And so that's what these levels are. They are the ways that we can show you how to go and hold on for bigger targets. We also have an entry confirmation system. Basically, it's really simple. It's a blue, yellow, red against a support or resistance area. Sorry, resistance is blue, yellow, red, and it's red, yellow, blue bars on a support area. And again, you can see here just quickly, and I'm not going to go through all this again. I am going to be sensitive to our time here today. But if you take a look here, it is blue, yellow, red bar is the entry, right? Your stop is represented by this pink line up here at 10 ticks, and you have a 30 tick here target, or all the way down at 41 is a potential target here. Now you're going to say to me, geez, Jason, that's awesome. Go ahead and cherry pick entries for me because that chart looks really cool. Go ahead and cherry pick. And yeah, go ahead while you're at it, cherry pick the ES for me as well, right? That's what I would say if I were sitting in your seat. Well, that's great, Jason. You told me all this cool stuff, and now you're showing me charts where it works. Perfect, right? Perfect. Well, I'm going to show you this. I'm going to do one better for you here. I'm going to throw a link in here for you, okay? But first, I'm going to show you, this is a particular trade that we took on March 3rd, right? Here is the screenshot from the levels. This is the actual performance of that trade, right? Of this day, you see that the trade was 2,020 bucks. The largest loss on that day was 250. We were 60 minutes in. The winning trade, we were 7 minutes in. The losing trade, and this was done on March 13th of 2018. So I'm going to come over here to our YouTube channel. Here's our YouTube channel, and I'm going to throw this link here into the box for you. And I'm going to show you down here on the March, right? There's April. Here is that same trade right here. See if I can find it. 200 ticks right here. Here's that trade right here, okay? And so what I do with these videos, it's not to say, hey, we won a ton of ticks. It's to show you that it can be done, right? That you can have these high risk reward trades and that they can be done. And this is the trade as it looked in the trade room. And so what you'll see here is a price ladder, right? What you'll see a price ladder with the entry, and you'll hear me talk about it. Anyway, the bottom line is this. If you come back here to the YouTube channel, there are literally and I mean literally hundreds of videos, all the way to the trade that we took yesterday, which was a 75 tick, 6.8 to 1 risk reward trade on the CL. Now you're going to say, okay, well, I don't see trading videos in there every single day. Well, I don't make trading videos every single day. I just told you that I'm winning about 33% of the time, right? And so if I have a losing trade, I could put a video out that says, hey, we got in and got stopped out. The point that I'm trying to make with these videos is to show you that you can hold on for these bigger trades if you have the right tools. When I talk to traders, and they typically tell me, Jason, that's great, but I don't know how to hold on. I don't know how to get to a target like that. I don't know how to make a target like that work. And so what I do, if you can't come to the trade room, is I show you video after video, day after day, of how we hold on for these bigger picture targets, right? We don't win every day. We don't win every trade. We don't have to, right? That's not what our statistical edge is. Our statistical edge is that we can win 35% of the time because we have a 2.5 to 1 risk reward and be successful. And the question I would have you ask yourself is, isn't it much more relaxing to know that I can win 35% of the time and still be successful versus having to win 68% of the time to try to have a success rate? Because you know your system, any system, is going to go through a period where it falters, right? And wouldn't you rather be at the bottom end of that scale winning, so that when you're already at the place where you're getting out, and then you hit the big win? And what happens when you start to get 40, 50% right on those big risk reward trades? Then that's when you're putting, as my grandfather, the farmer, would say, that's when you're putting the hay in the barn. All right, we're going to continue on here. So again, there are 400 plus trade videos on YouTube and Vimeo. If you go back there today, you'll see trades from yesterday, the day before that. There's plenty of trades for you to look at where we show you how we're holding on for 7-point ES winners, 67 tick CL winners, 90 tick CL winners, right? And a lot of these trades, we've had a losing trade or two leading into that, but those losing trades get wiped out with these big high risk reward trades that end up putting you up positive on the day. All right, so here is your day trading chat room, right? We come in every day, we sit down, we have a session that lasts about 2.5 hours, 3 hours every morning. Some days a little longer, some days not quite so long, depending on how well we are doing. We're usually finished trading by the European session close. What I would encourage you to do is to hit the website, which I'm going to put here in the box. Click on free trial. We're going to give you 5 free days in the trade room. Come in, take a look around, listen and watch what we do. I'll go into a lot more detail when we have a little more time about levels and entry systems and all of that kind of stuff. But the most important thing that I want you to hear today is to understand that if you could make that one paradigm shift from cut the losers short, let the winners run, try to hold on for a minimum of 2.5 to 1 risk reward. If you have some targeting system that you use, that's great. We know our targeting system works, right? We do it every day. We've done it for 8 years, right? And we know that our targeting system works. And one other thing here that you're going to see, and I'm going to put this out here for you so you can see this. I want you to look at the top. Well, let's do it this way. Yeah, I want you to look at the top up here. I'm going to put you in this trade. I'm going to put you in where we get into this trade. And let's see if I can find it here where we enter. Okay. All right. So you see here, this is where we are looking to enter the trade. If you look up here in the top left-hand corner of the screen, this may be a little bit tough to see here. You'll see that I'm down 29 ticks leading into this 75 tick 6.8 to 1. So I'm not winning every single trade, but I had a 75 tick trade that ends up putting me positive when I started down 29 ticks. So if you come back over here to the beginning of the video, you'll see that I'm positive ticks 46, right? You do the math, that is the same 75 ticks that accounts for that 75 ticks that I was on that particular trade. So hopefully that makes sense to you. And with that, Jason, that's it. So come visit us in the trade room. Take a look around. You'll see entries, exits. You'll hear us talk about all the different ways that we look to get into trades. We don't win every day, but I guarantee you, you'll see one of those trades where we get a 3 to 1, 4 to 1 risk reward ratio. So having said all of that, that's it for me, Jason. I went a
Jason,
little
that's
over.
awesome. Thanks, man. Hey, a couple of questions coming through. Mark, are you asking where the box is that you can get in touch with Jason? Is that what you're asking about? If you could just clarify that. So, Jason, if you could just, we'll send a link out to everyone as a follow-up to this session that we're having with everyone. And Mark, that would be a surefire way to get in touch with Jason and be able to join him in his chat, day
Yeah, and
trading chat room.
I just threw my email in there as well. So there's lots of ways to get a hold of us, but I just threw my email into the main window as well if you're interested in that.
Perfect. Those of you that had to bolt a little bit earlier but ask about a recording, of course, there's a recording there. Mark, check out the chat box. So it's not going to be in the questions box, but it's going to be in the chat box, if that makes sense. And just give me a thumbs up when you see it there. And Jason, I think you have you're going so fast, brother. You got it's JASON at mailotg.com.
Oh, what did I do? Did I misspell my name? I did, didn't I?
From one Jason to another, it's just a
You ever
moment
do
here.
that? Have you ever
Oh,
done that?
all the time, all
Yeah,
the time.
I have a credit card that's spelled like that. I have a credit card that's spelled like that. So
Mark, I'm going to put it here for you, just so you've got it. I want to make sure you're taken care of. That's okay,
yeah.
Mark. Here, I'm going to put a couple of links here in. I'm going to respond to it right here in the questions box for you. There's that. So you should have that there. And then I'm going to put the URL in the questions box for you as well. Those of you,
And so while
there
you're
you
doing
go.
that, yeah, and so while you're doing that, there's a lot of information to soak in. I mean, it's tons of numbers and information, but if you can get here's the takeaway for everybody. The takeaway is this. If you can figure out how to increase your reward to risk from whatever it is you're doing today, and if you don't know what it is, you need to find out, into a 2.5 to 1 risk reward ratio, or reward to risk ratio, you will be light years ahead of everybody else in the retail trader world. It's not an easy thing to do because trades come back and get you. Today was a great example in our trade room. I ended up down a few ticks today, but I had a couple of trades that went really positive, but it didn't quite hit the threshold and came back and took me out at break even. It's a hard thing to do, but if you can train yourself to do it, if you walk away with nothing else from this today, that little bit of advice can dramatically reshape your trading experience.
Awesome. Awesome. All right, everyone, thank you for joining. We're a little bit past our 45-minute mark, which is okay, no problem. Jason, as always, thank you, and
Yeah, thank you.
appreciate you hanging in there and presenting. I know you're a little under the weather today, but it came through great.
Awesome.
We'll get a recording of this out to everyone, and look for our next event. Jason, my friend, hope you feel better, and we'll talk soon. Okay?
All right. Thanks a lot. Take care, guys. Appreciate your time.
Take care. All right. Bye.